trading shares before an IPO. NASDAQ and SecondMarket are joining forces to make it easier for employees of startups to sell their shares. But how does all this work? We're joined by Bill Siegel, head of the NASDAQ Private Market, for more on the acquisition and what's in store for the team at NPM. Thanks, Bill.
Thank you for having me.
So you were the CEO of SecondMarket, and SecondMarket's business model evolved over the years. How is it going to work at the NASDAQ Private Market? How are employees going to be able to sell their shares through NPM?
Sure, so through substantially the same model, and SecondMarket had been involved in this market really since its inception back in 2009, when it was a purely over-the-counter market, a brokered market between ex-employees and current employees of private companies and individual accredited investors that were interested in buying stock. That market grew tremendously with Facebook, and it also evolved tremendously when Facebook went public. Companies realized that they really didn't want an unfettered secondary market to develop in their shares. They wanted control over this market, and they realized that it wasn't just something to control, but it's actually an opportunity to provide controlled liquidity to the shareholders for their early investors and to bring on new strategic investors through the process.
And so it sounds like no more one-off transactions. You're doing these larger scale transactions. And so is this with institutional investors? Tell me about who the buyers are.
Sure, so absolutely all broad-based transactions, no one-off broker trading. In about half the transactions, it's a company buyback. So the company is actually buying back shares directly from their current employees, ex-employees, and early investors. And in the other half of the transactions, there's a new institutional investor that is coming onto the cap table, and instead of buying preferred stock, like a new issuance from the company is saying, we don't need to issue new preferred stock, but we want you as an investor, and we'll let you run a tender against our common shareholder base.
There's a lot of there's a lot of hedge funds and institutional investors getting into the later stage these days, especially as these large unicorns, as they're calling them, these large valuation startups are staying private longer. But they don't get the same access to information as maybe a public shareholder does. How do they ensure that these shareholders know enough to know that it's a safe investment?
Sure, so symmetry of information is one of the things that we've solved for by only working directly with the company and running broad-based transactions. As you can imagine, in a one-to-one transaction, an individual ex-employee and a random investor that they find, neither are going to have really any current information on the company, and the company sure isn't going to provide them to just those two people. But in a broad-based transaction where the company is saying, well, I'm going to have a new mutual fund come on board and it's going to be a substantial investment that they're going to make, they're going to take the time to get to know the investor, give them a lot of information so they can perform due diligence on the company, and then when the tender is actually run, they're going to provide a lot of that information to the selling shareholders as well, so there's symmetry of information on both sides of the transaction.
And some of your clients include Pinterest, Tango, Shazam. What do you do to get startups involved with your system? Because there's a lot of other platforms out there for exchanging the shares of pre-IPO companies.
Sure, so in one misconception, most of these companies are not really startups. They get lumped into that group because they're technology companies, they're building their products in new and different ways, but the average age of companies on our platform is over 8 years. And some of these companies
over
are
8 years?
Over 8 years old, that's correct. Some of them are over a decade old. So they are really, in some cases, global enterprises with thousands of employees that in a different time probably would have gone public, and certainly pre-Jobs Act would have been forced to go public because of the shareholder count law that changed in 2012. But now they're really just later stage companies that are choosing to stay private. And what's happening in these transactions is you're getting now traditional public market investors that 5 or 6 years ago would have already owned a portion of the company because the company would have been forced to go public. Now they don't, and they're saying, well, we need to be involved in this company and these companies, plural, because they're not public. And so the tender offer platform is really a mechanism to mix the early investors who probably would have gotten out by year 8 or certainly year 10 with the traditional public market investors that should have gotten in earlier.
Do you think some of these companies will go public next year?
Oh, absolutely, yeah, there's no doubt about it. The private secondary market is really, it's a staging ground for this. All of these companies are at some point in time, I think, going to end up on the public exchanges, and they should. We're in really uncharted territory now where the age, maturity, and size of these companies is really unprecedented, and with that comes a lot of complexity. It's new complexity, lots of different types of shareholders, new tax rules, new accounting rules. All of these things need to be coordinated and organized so that when the company does go public, it's all buttoned up. And that's an area where both NASDAQ and SecondMarket can come together and provide that expertise, because it's not just a light switch at the end of the day, private or public, it's a process, and you need to be prepared along the way.
And now you guys have introduced blockchain technology to make it easier to do digital transactions on the NASDAQ Private Market. How does all that work?
Sure. So the blockchain ledger solution, it's a method for keeping track of records at the end of the day. It's pretty simple, but the method with which those records are distributed is unique. And traditionally, these things are kept either in software or in spreadsheets, and the blockchain allows that to be distributed out to all the holders, so that it's much more fungible, it's much more standardized, and it's much more scalable. So it's a new initiative for the firm. There's a lot of work to be done there, but it's a really exciting space, and I think both the mixture of SecondMarket and NASDAQ, being a public exchange and really a pillar of financial technology, it's the right time to be looking at this and making investments in the space.
All right, well, thank you, Bill Siegel. Good luck at the NASDAQ Private Market. From the NASDAQ, this is Katie Roof for TechCrunch.